Welcome to the Nadex Academy video on bull spread trading scenarios. My name is Toby Gennaro and I will be your presenter. What I'll be talking about today are bull spreads and some specific trading opportunities with these contracts. We'll look through a few examples to understand how to trade these contracts in several different situations. I've captured a number of live screenshots in this section to help illustrate some practical trading scenarios, so let's go ahead and take a look. The first one here is very basic. We're just locating a contract that's trading near its floor or ceiling price. In this scenario, we found a potential trade on the pound dollar that was exactly at its ceiling with about an hour and a half left until expiration. If you had a bearish view on this trade, there's a great reward to risk setup with no stop loss requirement. So if you catch a runner on this one, it's a great setup. Your worst case scenario is a 10 pip loss if you're wrong on the trade, but you have a potential 140 pip profit if you're right on this short setup. Let's look at another example of a short downtrend on the Aussie dollar. In this case, we have a few contracts to choose from if we want to get short on this trade. The 108.30 contract that I have circled here offers a fairly low risk of 15 pips, where if you're actually trading the Aussie dollar on the spot market, you'd be looking at a 40 pip stop just above the 108.71 as your nearest stop loss placement. You can see the floor ceiling limits of the contract that I've drawn in here on the price chart with this red box just to illustrate the floor ceiling limits on the contract. We're looking for an entry close to the ceiling on this trade, which gives us a significant advantage over trading the spot market. The reasons we're getting such a great reward to risk is because we're right at the ceiling limit of the contract, which is just slightly out of the money, and there's a fair amount of time left until expiration. So a good short setup on this one, and we're getting right in at the ceiling and looking for the price to go lower. And here's the result on that trade. We could have yielded a profit in excess of 45 pips, which would have translated to a great 3-to-1 reward to risk. So this one gives you a pretty good idea of how you can minimize your loss potential using bull spreads over the spot market. And you could have some obvious profit targets set up here at 1-to-1, 2-to-1, even 3-to-1. And if you were aggressive on the final contract, you might have even hit a 4-to-1. On this example, let's walk through the decision process on how I selected the optimal contract, and then we'll look at the results. What I've drawn in on the price chart are some more colored boxes depicting the floor or ceiling of the 3 available contracts we have to choose from on this trade. This gives you a nice visual as to how the contracts stack up against one another and where the floor ceiling prices overlap. So if you're thinking a bullish bias on this trade, we begin to look at the contracts to identify the best potential trade. And right off the bat, we notice that the first 2 contracts are in the money. The blue contract has a risk profile of 19 pips, the green contract a risk profile of 83 pips, and the red contract is out of the money, reflecting about 141 pips of risk. So just by comparing the reward to risk profiles, we can automatically rule out the red contract for a long trade since the ceiling provides a profit limit on the trade. The best contract with the least risk and the best opportunity for profit would be the blue contract with a total risk of 19 pips. And it's in the money, which means we get point-for-point movement with the underlying market. The results on the trade, we had a nice move here of more than 50 pips, which would have given us at least a 2-to-1 or even a 3-to-1 reward to risk. In comparison, looking at the green contract, this one would have yielded an additional 10 pips, but it would have cost us an additional risk of over 60 pips. So obviously not worth it in this case. Learning how to select the optimal contract here is key to staying profitable and controlling your risk. So I hope this helps, and we'll see you on the next trade.